The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 18th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one as well as an extraordinary weekend. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is that they are communicating to you and I. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in 877-927-6648, internationally 727-445-1044, especially because this is fabulous and fantastic Friday. Of course, this is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 258 points. She's trading at 17,237. S&P off 24 at 2,017. NASDAQ Composite down 52. Russell's off 13 points. Goldilocks up $15. Silver's up 40 cents. Light sweet crude back 48 pennies. Leading the charge here to the upside, you've got Prothena Corp up 7%. That's $5 buckaroonies. Darden Restaurants is up 7% as well, up $4. McKesson Corp up about 4. To the downside, Solar City. I need to reboot this. I'll have to do that during the show because that certainly is not the leaders to the downside. So we won't go with the leaders to the downside. You do have CarMax trading down about $5, Boeing off a little over 5. So let's get into what is the market doing? What is the market doing? Where is Santa? Not to be seen today. I do believe Santa is at Star Wars. Let's go take a look at the Star Wars inside the markets out here. And let's start off by taking a look at the S&P 500. Obviously, we are nearing the end of the year here. We still have some trading left in it. But if we take a look at the S&P 500 and we look at where, in essence, we've been trading, you could say that the S&P is broken down really in 2015 into two floors, really each with the same amount of space in them. You've got the first with regard to where the S&P opened up at the beginning of the year, 2058.90. You are at 206. No, what the heck is that? 2058, and you are at 2018. So we've got about a 40-point loss to the downside. Looks like about what does that work out to be about? Is that 2%? Yeah, it's somewhere right around 2% so far to the downside out here. And you can see this real sideways action. Now, it's a pretty good trading range because the top of the range is 2120. The bottom of the, well, when we say the bottom of the range, when we take a look at floor 1 and floor 2, the top of floor 1 is in that 2120-ish, 2130-ish area. The bottom of the floor is the 1995 level. Now, we know that the bottom of the floor is there for a number of different reasons. Number one, it's really where we have the bullish candles that are showing up each time price has gotten through there, with one exception. Por favor. And that happened to be when we saw the August 21st level break right through that floor. You've got a nice little bullish engulfing candle here on January 16th. You've got another one out here on February the 2nd. You've got another one out here, quite frankly, that's December 17th. But we're just really taking a look at, in essence, the 2015 year. And you've got your hammer candle that the S&P has traded back into today. It's trading into it right now. That was the one that was formed on Monday, on December 14th. That price difference here, we can see we've got, is in essence where we found the bottom, where the market found the bottom, back on August the 24th. Now, what is interesting here about the S&P 500 is if we take a look at the 50-day simple moving average and the 200-day simple moving average. The 50-day simple is priced at 2061.62, and the 200 is priced at 2061.76. We're talking about 14-cent difference before you'd have 14 cents would give us the kiss. The question is, can it get above that level? Now, for the last couple of days, I have mentioned, that I built a tool. It's a very simple tool out here. Well, it's not simple, but it's a tool. I'm able to do this through NinjaTrader. You are too, if you're a NinjaTrader user, and you can use that software for free. So, so there's really no reason for you to not use it. But here's one of the beauties of this tool out here. So, because the market, it looks to me like we're going to get this crossover. That's the way that it looks right now. And the question is, now that would be the golden cross that we're talking about. We have this death cross right here that took place 2095, 2093. When did it actually take place? It did take place till right here, 2074. It took place on the trading day of August 28th, right? August 28th. The bottom had already been put in, right? August 24th out there. But just to prove the point, a simple strategy that just says, hey, you know what? I'm just simply going to go ahead and take long positions when the 50-day simple crosses above the 200, and likewise when we have the opposite, the 50 simple crosses down below the 200, we're going to go take a short position to market. Now, this tool here, I can use it on any instrument. So what's important is this is a tool that looks for those specific trades, and what we've got here is the time period that I'm using takes us back to 1999. Why is that important to go back to 1999 when we're doing any kind of testing on that? Well, I'll show you the reason why it's important to do that. If we take a look at, we'll just put this on a monthly chart right now, and we'll come back to 1999. At least why I believe that it's at least important, because in this case here, we've gone through one downtrend, right? The top in 2000 to the bottom in 2002, the top in 2000, so we went all the way back up. We came all the way back down. In fact, if anything, I guess I could take it right now, really just to cover that wide base. In essence, you could do it to take a look at the consolidation period from low, from bottom to top to bottom to top to bottom to top, right? You want to get enough data points in there. So in this case here, I just simply have from 1999. So if we take a look at the S&P 500, because that's what we were looking at here. So I've got the S&P 500. I'll just simply, this is the data for it right now, but let's just go ahead and just rerun it. So I've got the S&P 500, and you can see I've got my parameters up here that are going to trigger those trades. I just simply am hitting my back test, and voila, up comes the information. Now, the information that is giving to you and I, this is why I say, hey, the death cross, why the media spends so much time on information that is so irrelevant. Is irrelevant the word out there? It's very frustrating, because most people don't do the homework, that, and so you're listening. I would hope that you are expecting me to give you accurate and valid information, right? And you would expect the same, in a national broadcasting system out there. They still are today. I hear them all the time telling us that oil's going down, the market's going down. They're so I want to use that word, but they are so confused out there. You and I went through and did the statistics ourselves. We know it's only like about 30% of the time is there any correlation on a day when oil goes down that the market is also going to go down. But back here, just take a look at the golden cross. That's going to be inside this long trade column out here, and inside the S&P 500. Now, there's only been, since 1999, by the way, there's only been 16, 8 of each, death crosses and golden crosses out here. But you can see the ones that have the most important meaning. And what that means is the way that this triggers its entry and exit into the system is when the day of the close, there is the golden cross. You enter the trade at that price point. Don't pay too much attention to the dollars that are out here. It's just buying one, in essence, value of a share of what the S&P 500 would be at. And you would not exit the trade, so we wouldn't use any kind of pattern recognition, but you wouldn't exit the trade until you had the old death cross out there, and that represents the short side of the trade. You can see on the long side of the trade that you've got 75% of the time it has turned into a winning trade, meaning the entry price on the long trade, right? The entry price was below the exit price on the short trade, meaning the so-called death cross. And take a look at how well the death crosses worked out there. Only 25% of the time, only 2 out of the 8 trades turned in to be winners. If we want to take a look at when each of those trades took place out here, now the current death cross, because I'm doing this as of today, right? I've got to close it out. It's really still in play. Although you and I are taking a look at where that death cross, where that 50-day simple is so close to the 200. I don't know. This may be a kiss and tell. I don't know if it's going to deflect lower out there. I have a sense, just the way that the numbers work, that we'll see a positive crossover here shortly. And so it's worthwhile, at least I believe, that it's worthwhile to be paying attention to. Now, we can take a look at this for anything. Let's take a look at this for the composite out here. And we're going to use just really the same time period. And I'll just go ahead and run that for you. Now, why do we want to do that? We want to do that because you can see here that on December 17th, today is what, December 18th? December 10th. I was looking at the exit. The entry time, December 10th, so that was what, last week, was when the NASDAQ had its most recent golden cross out here. However, if we take a look at the summarized patterns out here, we can see now, of course, this one is showing that the golden cross hasn't worked because it's just exiting us from the trade here. So it shows only 7 out of the 11 trades are 63%. But the reality is it's higher than it. It's 70% because this current trade is really not done when we take a look at the NASDAQ composite. If we look at the NASDAQ composite, what you're going to see out here, let's put up here, the COMPQ. And let's see, we got to change this over here to the daily. So you'll see when that golden cross took place out here. So you can actually see that took place. The cross was right here. Looks like on the trading day, I say December 9th. December 9th looks like when that actually took place. Prices pulled back into, by the way, its hammer candle and the gap up. This should be strong support inside of the NASDAQ composite. Why? You've got both the hammer candle and the gap up on the following day on December 15th. You can see inside the composite how it's pulled right back into that area. And we'll go take a look at volumes inside the Qs and so forth. But now look, with regard to those moving averages or with regard to that program, you can build that tool yourself. It's got a little widget or gadget or I forget what they actually call it out there. But if you can learn that, you can learn this stuff and you can do it. Now, I've tested basically virtually every moving average that's out there. And how I use it is I take a look at the shorter term time frames for the different contracts that I trade, as well as just other ones that we pay attention to for the shows. And I just try to get a feel for the current contract, what moving averages are. But those are lagging indicators. They're momentum style type indicators. And you're going to get in the trade either to the short side or long side before you get that signal out there. But you also like to see that eventually the momentum gets on your side. So that's it. That's all I've got. No, we're going to go to the break. The Dow's off 263. S&P's down 24. I saw something flash on the screen, said the VIX index was up by 10% today, 10.14. Oh, only 8% right now. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, how about that 886-point move inside of the Nikkei last night? Now, that was a huge move, about 5%, a little under 5% from its high down to the low out here. But take a look at this move. The Nikkei opened up at a price of 19,320, ended up closing out at 18,986. But in between that time period, went up to a high of 19,869. Now, we had a somebody who asked me, I think maybe sent an email yesterday for me to take a look at the Nikkei. And remember, what we looked at was first we looked at the correlation. When you're trading the Nikkei, you're trading the currency pair. This is the Japanese yen, right? We took a look at both. We said, hey, we can clearly see the uptrend in both of these out here. We then went ahead and we took a look at the currency pair. And inside the currency pair, our conclusion was, hey, you know what? Inside the Nikkei, let's turn off those moving average lines. We don't need those right now. Let's turn those off. We said inside the Nikkei, there was a clear line of resistance. And with the yen being so close to that area, that we wouldn't really, because this listener had wanted to get long the Nikkei out here. And we said, you know, why don't you just wait until the yen itself can break above a line of resistance. Now, we drew that line of resistance right here where a breakdown began, a little nervous breakdown that was on August 21st, right in association with what happened in our markets as well. we looked at the August 21st level or 22nd level might have been inside the S&P 500. And so when we take a look at that, we said the price there, because this was drawn yesterday, 123.49. So we said wait until price is able to break above that level. What did the Japanese yen do last night? Went up, tested that area, and rejected it. It has rejected it for the last couple of, it's rejected it since November 9th. So about a month and a half out there, about 5 to 6 weeks. And so the same thing stands. Don't put your hands on the Nikkei until this thing can really break, until the yen itself can go ahead and break above that level. Doesn't change the outcome, but what a heck of a move out there inside of both the Nikkei as well as inside of the yen. As long as we're in the currency section of the show, now this is bad news for any bulls out here. That ain't no bull, and that is the mere fact of the Euro Japanese yen. Now, what we can say about this currency pair, because it does track the U.S. stock market better than anything else, and if you were also looking for some logic and reason as to why the market is pulling back today, it's got to swim upstream against this currency pair. Very hard to do out there. Price is pulled back into the 0.618 retracement level. It's pulled back a little bit further than that. We had that breakout session here on December 3rd. I don't have any indication. There's really no pattern per se. I could give you an A to B equals CD to the downside. It would look like this. Your A point would be out here, looks like on December 4th. Your B point would be down here on December 14th. And your C point looks like really would be last night. And, we can see it did a 1 to 1.272, A to B equals C. It's basically got a Gartley buy pattern. But look, folks, unless you see the cavalry run in, you wouldn't be buying this. It's called the Gartley buy. It really should be called the potential Gartley buy. You got to wait for the cavalry. You got to wait for those bulls in a buy pattern to show up. And, what this is basically going to need is the Euro-Japanese yen to go sideways for a day, because that candle from today is such wide-ranging. It actually suggests wants to pull back a little bit more before it has any potential kind of confirming pattern out there. If we look at the euro versus the U.S. dollar now, that thing is still just hovering around the 0.382 retracement. So this has not fallen apart, but it hasn't done a whole heck of a lot. Looks like $1.07 to me is really where it wants to head to, 1.0728, but it's doing pretty decent, just hanging around out here. Lastly, let's look at the Great British Pound. What is it doing? I think we took a look at that descending trend out here. Now, if we just look at swing points, one possible bottom. If we look at the expansion of swing points, that's from November 6th to the high. Oh, I got to put the expansion tool on, so let's do that. If we look at the low from November 6th to the high out here on the trading day of November 19th, we can see that this thing had done a 1.272 expansion. So there could be a 3 drive to a top that's forming. Let's look at the current expansion pattern. That would be off of the December 2nd low to the high out here on December 11th. So the 1.272 expansion would take it to about, let me get rid of this other pattern that's out here. Get rid of that other. Okay. It takes you to about 148. Now, ideally, you would like to see this form a 3 drive to a bottom pattern. What that would look like, you don't want to force these. If you force them, it's not a real pattern. So we can see that the time span was 18 bars in between drive 1 and drive 2. And so that would say you'd be looking at the Great British Pound. If this thing can get to about 148 and do it on the trading day of December 28th, probably when everybody is sleeping out there, then you'd have a 3 drive to a potential 3 drive to a bottom pattern. You'd want to wait for the next trading session, see if you got a bullish reversal signal, and if you did, and you trade the currencies.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sorry about that. Talked right through the break out there. Didn't hear it in my ears and didn't see it on my screen. In any event, let's go out to Tallahassee, Florida, and speak with Ben. Ben, thanks for holding. Thanks for calling. How are you doing this afternoon?
Excellent, Steve. So quite a day.
Been quite a week out here. It's been a trader's paradise, just as it has been for all of 2015 for the most part. But
well, as long as you're on the right side of the trade, right?
Excuse me?
I said as long as you're on the right side of the trade, correct?
Yeah, and there's really two. You got 2 out of 3 chances to be on the right side of the trade. You can either be on the right side of the trade or you can be neutral. Both of those could be the right side of the trade.
That's a very good point. Hey, quick question on your take on the VIX. So it looks like, really 2 questions. So it looks like on the daily and the weekly, the VIX is above the 50-day. First question is, if you could reiterate your rule of thumb on when the VIX is above the 50-day, and then the second question is, What are your thoughts of it going above the weekly on a 50-day moving average?
So that's a great question, and the one that I can absolutely respond to is the 50-day on the daily. So let's tackle that. Oh, I know I should have done this. Let's see here. What's the best way to do this? It's probably on this chart right here. So let's take this. The top portion of this chart is the VIX index. The bottom portion of this chart is the S&P 500. So I want to do this. So I take everybody back to the same thing, and then we'll just explode it up. Now, what I've done is I've come back to 2011. Let me go all the way back to 2007 for you. But in summary, when the VIX does trade above the 50-day exponential moving average, the first rule of thumb is that that is when there is a lack of liquidity, and that's where you see the markets trade lower. Many times people focus on the actual number of the VIX, what the VIX reading is. And people will say, hey, if it's at 20, the VIX is low. The reality is, if you really go back and you study it, the most important thing is understanding where the VIX is numerically in relation to the 50-day exponential moving average. Back in September of 2008, the VIX reading was 24, and it had moved above the 50-day exponential moving average. And of course, our markets, careened lower. The first time that the VIX moved below the 50-day was back in December 10, 2008. The price reading there, the close was 55.73. If you just simply use the number, and that's how you registered staying in a trade. Now, in that case there, the S&P 500 went ahead and moved sideways. So when the VIX is below the 50-day, the S&P either moves higher or sideways. It doesn't move to the downside. And we can see that in the March 2009 lows out here, the VIX on March the 10th moved below the 50-day. The close on that day was 44.37, and it stayed below the 50-day exponential moving average all the way up into the first time was into September of 2009 out there. And you can see the S&P just continued to move sideways. So that is the first rule of thumb that I have. I have not really paid attention or studied it from a weekly perspective to know if there's any kind of meaning to really add anything to the conversation. But why don't you tell me what have you found? Have you taken a look at that?
Well, not really. How crazy this VIX can be, that's for sure. I guess one other question I had on the VIX, as far as I think you came up with a great assessment on the 50-day, and I've never looked at it that way. So it was a really good find from your standpoint. Did you find that the market would continue to either climb or fall for a certain number of consecutive days typically after it went above or below the 50-day?
No, I found a different tool that I use with subscribers all the time, and that helps us understand maybe a band. That's a hint out there, a band of where the VIX is trading within, to help us, especially in this sideways market. I think, Ben, the most important thing that you and I can do as traders or investors is understand the type of market that we are in. And what I mean by that specifically is, are we in a trending market, or are we in a market that is going, in essence, sideways? And as soon as we evaluate that and make that determination, then that sets up our entire set of trading rules out there. Because in a consolidation market, what you're going to learn to do, what we all need to learn to do, is we need to be able to take our profits more quickly. We need to play shorter term type patterns out there, because this is, if anything, this is proven to be a market that truly is consolidation. I mean, we're only, what I said, 4, 5, 6, 7 points, 8 points away in the S&P 500 from the beginning of the year. We've had some nice swings out here. So whether it's A to B equals CD patterns, whether it's these price relative strength divergent patterns that show up, whether it's wave counts, and this week is a perfect example. And I will show you what that perfect example is, because it called both the bottom as well as the top out there. And when you can find a tool that does that, this is the 120-minute chart here for the ES Mini. And so my clients and I, we simply got long the ES Mini as we were doing this. I was doing this show on Monday, right at about 1 o'clock, and said, look, we've got this nice seventh wave move. That's the letter G on my chart. We've got price moving lower, doing it with less relative weakness, and we had a bullish reversal signal that was forming. We went long. I said in the newsletter, we're going to exit our trade at about 2073. Well, when the market inside the ES Mini, and when the market was making its high at about 6 o'clock in the morning, when I begin writing my newsletter, the high out there was 2071.50. It did get up to the 2073 level. No, it got up to 2072.75. Missed it by a tick. Yeah, God, that's horrible, isn't it? Missed it by a tick. We did end up exiting the trade out there. Now, I had some other reasons to stay. Let's not go ahead and take the short side of the trade. That was a bad move. That was a wrong move out there, because the same pattern that called the bottom is the same one that called the top out there. Price was moving higher, doing it with less, in this case here, less relative strength. Where are we now? We're not in any kind of pattern that called the last top or the last bottom. This says to me that price can still continue moving lower. And with the VIX inside the ES Mini inside the S&P, and with the VIX index being above the 50-day exponential moving average, to me that's basically the outlook that we have right now that I would see. Does that answer any part of your question, or?
Yeah, no, that helps. I was just curious if you did any more assessments on a longer term basis of the VIX.
It's just the key is, with any set of tools, is making sure that we know what type of market that we're in. And the type of market that we're in, and the real importance of this, Ben, and the reason why I'm spending some time on it is, next year is a presidential election year. So it's and there's going to be a lot of people, as we start rounding the corner here, they're going to be coming out and sending out a lot of charts. But just like they give us a lot of BS, okay, they tell you about oil and its correlation to the S&P 500, or one thing or the other out there, it's a coin flip, because it can go either way. I've studied
one little interesting tidbit, for whatever it's worth, maybe something to keep a close eye on, is I just did a 3-year monthly on the VIX, and it looks like that is now going above the 50 it's been forever. Unless my chart's wrong, if you look at that straight across, it's like it's only been above the 50 like maybe 3 or 4 times on a monthly over the last 3 years.
So, I certainly see that, and I'd have to go back and really study it to understand the relevance of it. I will say this.
We'll learn something here.
No, absolutely. Hey, look, every day, I strive to learn something. I'm sure you do as well. Whatever it is that I'm reading out there, and that's the key. But the one thing that I want to pass on to everybody is that's listening is make sure you understand the market type that we're in, and we are in a consolidating market. And so this is a market where you need to learn to be both bullish and bearish and take those patterns when they show up. This is not where people are doing a high five and you've won the game because the trade is moving in your direction out there. What you need to be doing is when the trade is moving in your direction, like you said, it's nice to be on the right side of the trade. You need to be focused on, okay, where is this turn going to come? Because I can guarantee you one thing. Of course, I can't guarantee it, but I like to say that. Sounds good. I can guarantee you one thing: the market is going to turn in both directions out there. So that's my spiel. At this stage here, the VIX is trading at 2057. It's only up 8%, a little over 8%. So there's no reason for the VIX, if the market were to close here, there's no reason for the VIX to not continue to move higher. There's no reason for the market to not continue lower. And that's really that message inside the 120-minute chart that you and I just looked at for the S&P futures contract.
Good. Steve, thank you very much, and have yourself a great holiday.
I will. You do the same, and I'm sure you'll be glued to the tube watching the. How did Florida State get the short straw? Where they're playing in the Peach Bowl in the Georgia Dome?
Yeah, I'll be honest with you. I'm not even sure. I haven't been keeping up with that too much, but
no problem. They're playing. Yeah. They're playing Houston, so I don't know how good of a game that'll be.
Yeah.
All right, my friend. Right. Hey, happy holidays to you, and we'll look forward to speaking to you again soon.
Hey, thanks a lot, Steve.
You bet. That was Ben in Tallahassee, and now we're going to go to the upper East Coast. We're going to go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this afternoon?
Hey, Steve. Not bad, thank you. I was wondering whether there might be an entry for the S&P.
So the entry for the S&P to which side?
Go long.
long. I think you've got to sit tight. I think the best thing to do now what the market is doing as we speak right now, it has been pushing lower all day long, and it has been doing it with less relative weakness out here, whether it's the NQs or whether it's the ES out here. So it does not have the gusto, but that does not mean that it cannot continue to move lower out here. Today, in my opinion, is not the day. I think the best time, the best pattern, the most consistent pattern has been when a price has been moving lower or higher on the 120-minute time frame for the ES Mini, and that says to me we probably get down to the lows from Sunday night, Monday morning, inside the ES Mini, maybe around the 1983 level. Let this thing make a 100% move of a move, and it really should, because Lou, if we go take a look at the let's go take a look at the 5-hour charts here. I'm going to take a look at the Dow. Well, is it the 5-hour chart? Let's see. No, stay with the 120-minute time frame. If I look at the Dow futures, the Dow itself is all the way back down into that low from Monday, and it's below any kind of retracement level. So the Dow ought to at least be able to tag 17,053. It's at 17,127. So that says to me you've got another 75 points to the downside. It would not surprise me to see another 75 points to the downside, today even. But ideally, it won't do it today. You'll see some other kind of bounce, and we'll see that take place on Sunday or Monday out there. So I don't see an entry to the long side. That doesn't mean that I can't give you the reasons why, either by taking a look at the NQ, which also has been moving lower, doing it with less relative weakness out here, why the market, could also fend off some of this selling. But I don't see it as the bottoming pattern, as we speak right now. So now, how'd that dust trade work out for you? Did you close that out yesterday, or still in it, or?
No, actually, I closed. I got stopped out the same day I talked to you.
Ah, okay.
Yeah.
Okay. Yeah, no, that's another wild market out there, is the mining sector. But in the ES Mini, I think you've got to be patient in taking a look at a long trade out there. So maybe check back with me on Monday, and I'll give you some. We'll take a look at the charts and see what it's doing. All right, my friend?
Are you still bullish on the minus? Because I nibbled on nuggets today.
I am, I am, but by the hair of my chinny chin. You mentioned that you had gotten stopped out the day that we talked. Yesterday, my stop was missed by 1 penny. 1 penny. Now, that doesn't mean that we're out of the woods, because, if I take a look at the GDX, which is the trade that I am in at the moment, let's, in fact, take a look at it. See if I get some volume out here, see what it's doing today. I think the more likely pattern that's in play is that gold is going to make one more swoosh to the downside. I can't guarantee it, but the best buying pattern would take place if, in fact, that's what it did. Today, the GDX is up with 31 million shares. Yesterday, down with 92. So this thing is bouncing on fumes out here. So I am longer term bullish on the miners and metals, and I believe that nearly everybody else is on the other side of that trade. But unfortunately, yesterday was not a good day for Goldilocks. Yesterday was a good enough day to tell me that what gold wants to do is in fact, I'll try to put that chart on my screen here. Give me a moment. I just need to switch over. What I'm looking at on gold itself, I think it's a continuous that'll pull up on my screen here. But see, gold has been moving lower with less relative weakness as well, and it only got down to wave 6. Yesterday's move suggested to me it's going to go ahead and make that 7th wave, and that would be the buy. But, I'm long right now because my stop didn't get hit. All right, my friend?
Okay. Gotcha. Thank you, Steve.
You bet. Happy holidays. That was Lou in Nashua, and we'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. A couple of questions that have popped up. One was if I could take a look at LNG. So let's take a look at Cheniere. I don't know how to properly pronounce that, but the question here is, can I look at it as a long? I think, Steve, can you look at LNG? So it just says, okay, I just looked at it. No, I'm just kidding. We can see that this thing is trading at $35.89, just like natural gas. This thing has just simply been trashed and thrashed. We got to put this on a long-term chart, see what it's trading all the way back into. So as we look at this here, it's not trading into any kind of floor or base of support or anything. I'm referring to LNG out here. So I think you've got to stay away from this. If we look at a weekly time frame, let's just see what's going on here volume-wise. Volume is picking up to the downside this week, even. So is there anything that this is trading into? Not a darn thing that I can see. Probably if we put the natural gas contract up against LNG, we'll probably see some type of correlation out there. So even though you might want to bottom fish, I just don't, you'd have to at least see some type of reversal of fortune out here. And it's just not in the cards. At least it's not there today. A question, if I would take a look at Verizon as well, VZ is a ticker symbol. Question is this a buy out here? So if we look at Verizon, she's trading out right now at about 45.75, trading really with inside its market profiles. If you're looking for a buy on this, it's just a very small range that it's trading in, but your buy point is right around 44.25 to 44.63. I wouldn't see this as a buy as we speak here. It's really just been consolidating ever since that hard break on August 24th. The question was if I could take a look at AT&T as well, ticker symbol T out here, and does this thing look any different, any better? And the answer is no, not necessarily. I don't know what took place on its trading session here, where it had gapped up at the open on October 23rd and then sold off from the open. I don't know if that probably was an earnings deal. I used to have the earnings dates on here. I'm not gonna be able to find it that quickly. But in any event, what we can see is it had volume here of 46 million shares. We were up here yesterday with half the volume, 27 million shares the day before, 31. So it's not ready to bust out to the upside. You know the expression: if you can't break them to the upside, you go ahead and you break them to the downside. So that says that the buy in AT&T, or ticker symbol T, is probably down around the lows of November 16th, or the high of November 16th at least, which is 32.73. So that should take care of all of the requests here for the day. So what else do we want to really take a look at out here? I think the best thing is, again, we are inside a market that is willing to give to both a bull and a bear. What your responsibility is to learn how to be both, and to make sure that you have a exit strategy on both sides of the trade out there. If you can do that, just like my clients and I did this week, then you'd be able to, and you don't have to take every trade in order to be up. I have missed out on a bunch of trades this year, but newsletter subscribers are up 12%. So, I keep meticulous details on everything that we do, and you don't have to be in on every trade out there. Just wait for your patterns to show up out here. I think I must have typed in the wrong symbol. Yeah, CTL. Don't know if I can do this here in the next 5 seconds, but we'll try. So the request was if I take a look at CenturyLink. Now, CenturyLink tested its swing point from October 22nd. That had 4.9 million shares. Tested with 6.3. Nope. It is not ready just yet. CenturyLink. Folks, stay tuned. David White is up next, and then Tom O'Brien from 3 to 5. Have a great weekend. Be safe out there. Hey, somebody's going to cut you off. Let him do it. And then smile and wave. Because that's the time of the year it is. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.